Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the earnings special conversation that we are going to be having with Allcargo Logistics, and the top management is with us. Mr. Ravi Jakhar is with us. He's the Chief Strategy Officer of Allcargo Logistics. Warm welcome to you, sir, on Business Today Television. It's good to have you with us. Well, just to highlight for all our viewers what exactly have been the Q4 earnings. So you've declared with the sales growth of just about 0.1% this time around. We have seen a loss on the bottom line as well. Full fiscal year, we have seen the sales have dropped by about 27% year on year as well. What we have seen is that there is a loss of about 6 odd crore rupees for the fourth quarter. How would you really detail for us? How have you assessed the quarterly earnings and the muted set of numbers on both the top line and bottom line? What could have been the key reasons, sir?
Yeah, so Sakshi, I would say that the annual results are not the right comparables. There have been a lot of corporate actions. In the middle of FY24, there were two large businesses which were demerged from the company. They are now separately listed. And the best way to look at the business is to do a quarter-on-quarter comparison. We had been witnessing, significant challenges on both the international and the domestic business, which had led to a decline sequentially from first half of calendar year 23 towards the end of 2023 calendar year, right? Last 2-3 quarters, we have seen it being more or less flat with, the EBITDA being range bound, plus minus 5%. Last quarter was up 4-5%. This quarter is marginally down, but it's largely been flattish. What's happening now is that in the international supply chain business, the challenge for us was macroeconomic environment, which is now changing. We've been maintaining this, that we estimate the second half of 2024 to be good. And I'm glad that the green shoots are now visible. We noticed that demand has started to grow up in various markets, and that combined with the inventory restocking is leading to ocean freights going up. And whenever ocean freights go up, it means that the demand is likely to increase, which means that our volume should go up in the international supply chain business. Our utilization should go up. To give an example, on many trade lanes, like if you look at Asia outbound into South America, ocean freights in the last 6 to 8 weeks have increased sharply from about $2,000 to about 6,500, 7,000 US dollars. And this means that we should see increased utilization, improved volumes, what we've been talking about for the last 6 months, that we expect the second half of 24 to be good, and we expect that to now happen. On the domestic side, the macroeconomic environment in India has remained robust. The challenge was on the internal side. We've been operationally transforming the Gati Express business. And there again, the good part is that we have already achieved a significant cost reduction. We have been able to reduce the cost per kg by as much as 7% between April 23 and the March 24 exit. And those exit rates now continue, which means that the sequential improvement that you see in the quarter is largely on the back of cost reductions. To bring your attention to the numbers, quarter 3 compared to quarter 4 now, we have seen 15% increase in gross profit in the Gati Express business. We have seen a 115% sequential quarter-on-quarter improvement in EBITDA, and that's been on the back of cost reductions. And last quarter was only a part of it. Now going forward, the entire exit rate remains maintained. The service levels have been significantly improved. We are now looking at 90% plus service levels consistently. Delivery efficiencies are almost like 98%. Pickup efficiency is 99%. So the point is that on the domestic business, the problems were more internal. As we are building up the infrastructure, services, and all of that has now been done. We are extremely good and sustained in service parameters as well as in the cost efficiency. So an outcome of that should be a sustained good performance, both in terms of improvement in market share as well as bottom line. Okay. And on the international supply chain, like I said, with the macroeconomic rebound, overall business looks quite good going forward.
Okay, understood. I will dwell upon the international businesses just a little bit, later. But first, I wanted to understand on the volume growth, sir. If you could break it up for us month-wise, if you have that figure for us for the last quarter, and going forward, what is the outlook on the volume growth that you have for the coming quarters as well as for FY25?
Yeah, so we have been sharing monthly volume updates as well for our shareholders and investors. And the monthly volumes in the international supply chain business have largely remained flat, with an increase expected in the April to June quarter. And like I said, the second half should see, we expect anywhere in the range of about 8 to 10% increase in volume in the second half, which should be visible. On the domestic side, we maintain, a 15 to 20% kind of volume expansion in FY25 compared to FY24. We have seen about 19% last year and about 10% this year. So average has been about 14-15% volume growth on the express business. And we believe that a similar growth rate, maybe slightly higher, should be possible and visible in FY25 as well.
Okay, understood. What about your overall margins, sir? Where do you see, FY25 really looking like in terms of a margins band? If you could give us, how soon do you see an improvement on that coming in? Will that be beginning from Q1 or will it take a little longer?
So, like we have maintained, I would like to reiterate that we expect second half of the calendar year to be good in international supply chain business, which means July onwards. We also would be done with the severance cost impact and by end of August. So I think next quarter should still be sequentially better than the current quarter, but we should then see further significant improvement as we move into July onwards.
Okay. Now, coming to your segments, international supply chain business, express business and contracts logistics business as well, could you give us a sense of the kind of revenue contribution we've seen from them in this quarter and the EBITDA margins? How are they looking for these specific segments?
Yeah, so international supply chain business is the largest business for us, which accounts for almost 75 to 80% of our revenues, followed by the express business, which is now approximately about 1,500 crores revenue for us, and then the contract logistics about 300 to 400 crore revenue business for us. In terms of the growth rates, I already shared with you, and in terms of the EBITDA margins, I believe that express business and international supply chain business should see improvement in the margins. Contract logistics businesses always remain good for us in terms of the margins, and we expect them to sustain going forward as well.
Okay.
Yeah.
You've also talked about the cost reductions, and you're expecting that probably August onwards is when you see the benefit coming in. On the bottom line and on the EBITDA margins, what could be the added on, basis points of an uptick that we can expect from this cost benefit?
Yeah. So like I said, on the express business, we have already achieved the cost reduction and the March exit rate is already good. So that benefit should come in from April onwards itself, as far as the Gati Express business is concerned. On the international supply chain side, the cost reduction takes care of SG&A costs being in check, which means that when the gross profit expands, the bottom lines improve. So gross profit expansion is what we expect should happen with the macroeconomic situation improving in the second half, and that's why it is expected from July onwards. That's the typical peak shipping season when the volumes start going up, and that's the expectation we have.
Okay. Lastly, could you list out for us 3 key growth drivers for you for FY25? What is it that we should be monitoring as a viewer investor point of view? Also, secondly, what could be the overall outlook on FY25? If you could give us a guidance on both the top line and the bottom line.
Yeah. So I think if you look at last couple of years have been an year of strategic consolidation for us. We as Allcargo are now celebrating 30 years, and it's been a landmark year for us. And there's a lot of focus on strategic initiatives. So that's the first part. You would see the entire demerger process between Gati and EQ as well getting concluded by early next year, somewhere between Jan to March, which means that the two companies will become separately listed. That should benefit all stakeholders. Beyond that, the company has always been ahead on technology. We are significantly ahead, not just in the physical infrastructure and the global leadership, but also on the technology side. And that's something, which comes from the founder's vision. And that's something which we believe gives us a strong edge. Today, we do not have any other company competing in our domain in LCL consolidation, which has the physical infrastructure and technology. And we would like it to be a key driver for our growth going forward as well. Last 3 to 4 years, every single year, we have gained market share globally. And we continue to expect that would happen in the next 2 years as well. So technology-led market expansion, a strong, robust focus on cost efficiency, and corporate restructuring, creating value for all stakeholders. I would say these are the 3 key drivers which should all be visible in FY 2025.
Okay, great. Well, thank you so much, Ravi, for being with us on this special edition and detailing all these insights for all our viewers as well. All the best for the upcoming quarters, so that we can continue to discuss with you as to how the company is really, moving as far as the guidances that you've shared with us. Many thanks for being with us.
My pleasure. Thank you.
All right, viewers, we wrap it up at that on Allcargo Logistics, the Q4 earnings and the outlook. You've heard from the management as the key focus areas for growth and the improvement that they expect starting to pour in FY25. Although it may take a little while longer, there could be just a marginal improvement in Q1, but in the second half is clearly when a large part of improvement could be coming in for the company. Many thanks for being with us, but do stay tuned as we will get you daily calls at 12 noon, which will answer all your stock related queries, and all the doubts are bound to take place in your head when markets are under sharp volatile turn right ahead of the big event Lok Sabha election results. So how is it that you should be positioned on the markets? What are the stocks that you should look at? How should you be strategizing on those? Everything will be answered. So do start sending to us all those queries. WhatsApp number flashing on your screens. I will see you at 12 noon.
कश्मीर में हम इस बार देख रहे हैं रिकॉर्ड